Have you ever gotten a great signal, but the whole trade went up in smoke because you didn't choose the right time frame? Or maybe your system works, but only in a certain range. In this video, I'm going to review a simple but incredibly effective combination. EMA with period 21 and source equals open along with stock RSI. But we're going to test it on 3 different time frames, 1, 5, and 15 minutes, to see which one works best. I promise that by the end of this video, you'll have a much better idea of how to enter and exit accurately. Let's go! Introduction to tools, EMA 21 and stock RSI. First of all, let's quickly remind ourselves what we're working with. The EMA 21 is an exponential moving average, which, unlike the SMA, gives more weight to recent prices. But here's a tip. I set the source of this EMA to open, which is the opening price of the candlesticks. Why? Because this way we react faster to trend changes. Of course, we are aware that the noise may also increase. Stock RSI is also an enhanced version of the regular RSI that shows much faster fluctuations. Our settings are the same as the default. RSI length equals 14, stochastic equals 14%, K equals 3%, D equals 3, time frame 1 minute. In this range, because the candles are made very quickly, there are naturally more signals. But the important thing is that most of these signals are fake, meaning you may enter, but it will move the opposite way very soon. What is the entry strategy? First of all, you need to make sure that the EMA 21, with open source, has a certain slope. That is, it is not flat or range-like. If the price moves below the EMA and a strong green candle is formed with an opening price above the EMA, you should go to stock RSI. If at that moment, the stock RSI is below the 20 level and the %K line crosses the %D line from below, then it is an entry signal. But that alone is not enough. It is better to have a third confirmation. For example, the trading volume on that candle is higher than the previous candles, or the previous candle has a long, lower shadow, which indicates high buying pressure. How to exit, or when the stock RSI reaches above the 80 level and gives a reversal signal, or when a strong red candle forms below the EMA, especially if its opening price is below the EMA. What is the crucial point in this period? You should have a stop loss, because if your entry is not correct, the market will not give you a second chance. My personal suggestion is to definitely see the overall market structure on a higher time frame, for example, 5 minutes, before entering. This way, you will understand what the main trend is, and then in 1 minute, you will only look for signals in the direction of the main trend. If this has been helpful to you, and you'd like to learn more about precise, low-risk scalping strategies, give me a like now so I can see if this style of training is useful for you. And if you have any questions or experiences with time frames, be sure to write them in the comments. Maybe the next video will be exactly about that. 5-minute time frame, advanced version. The 5-minute time frame strikes a very good balance between speed and accuracy. It is not as fast and volatile as the 1-minute time frame, nor as slow as the 15-minute time frame. That is why many traders choose this time frame for semi-fast scalping. Starting the analysis. First, we look at the EMA 21 open source. If its slope is clearly upward and the candles close above it, it is a good sign. Now we wait for the price to make a short correction and approach the EMA, but not break it completely. At this point, we look at the stock RSI. If it makes a bullish cross in the lower zone, below 20, i.e. the %K line crosses above the %D line, this can be an entry signal. Ideal entry point. A strong green candle with an open above the EMA, a bullish cross of the stock RSI in the oversold zone. Confirmation from the previous candle, for example, with a lower shadow or a reversal candle. Exit point. Price touching the EMA after growth. or a negative cross of the Stochastic RSI in the area above 80. An interesting feature of the 5-minute time frame is that you can also use classic candlestick patterns for further confirmation, such as pin bars, engulfing, or blanket candles. And if you are a patient trader, you can even enter positions with a larger target in the 5-minute time frame. For example, 2 to 3 times the risk, just know the main market trend. Remember, before anything else, be sure to look at the market structure in 15 minutes or 1 hour. This way, your trades will be in the direction of the trend, and the probability of success will be higher. 15-minute time frame, advanced version. Now we come to the heaviest time frame today, 15 minutes. This time frame is for traders who are looking for fewer, more accurate, and deeper trades. In this time frame, the EMA 21 is like a backbone. When the market respects it, and the price regularly reverses, it means that a strong trend is underway. Entry strategy. You wait for the price to make a reasonable correction towards the EMA 21, not a sharp drop. At this point, if the stock RSI crosses bullishly in the oversold zone, it can be a strong signal. The candle that confirms the entry should have characteristics such as high volume, lower shadow, or reversal structure. These types of entries usually produce larger moves because trends are stronger on the 15-minute time frame. How to exit. When the price reaches the resistance area or EMA, it will bounce back, or a bearish cross in the overbought zone, above 80. Advantages of the 15-minute time frame. The number of signals is less, but their success rate is higher. Less chance of seeing fake outs or false breaks. And since you have more time, you can wait for more factors to confirm at the same time. If you are a beginner, this time frame may seem boring to you. But if you are looking for low-stress trading and want to analyze with a more open mind, this is the best choice. Another important point, the 15-minute time frame is great for setups with a higher risk-reward ratio. For example, 1 to 2 or even 1 to 3. Crucial tips for properly implementing the EMA 21 plus Stochastic RSI strategy. 1. Accurately choosing the time frame. No strategy is universal. You should choose a time frame that matches your trading personality. If you are a fast person and can make quick decisions, a 1-minute time frame might be suitable. If you are looking for balance and accuracy, 5 or 15 minutes is better. 2. Using source open in EMA. This setting makes the EMA react faster to price changes, but in return, market noise will also affect the signal more. So be sure to use a second confirmation like Stochastic RSI. If you feel that after watching this video, you are one step closer to becoming a professional, just subscribe to the channel so you don't miss the rest of the tutorials. By the way, don't forget to ring the bell because the next videos are going to be deeper, more accurate, and more profitable. Until the next video, you will be profitable and energetic.